good people at Options House. Jumpin' Joe, how you doing today?
I'm pretty good today, Joel. How are you?
Good. We got big earnings coming out today, but we got something really a special guest today on our show today, right, Joe?
Well, speaking of Options House, we happen to have the CEO of Options House coming on the show today, George Ruhana. What do you say to that, Joel?
I think that he is going to be a special guest. We'll get to talk to him about that platform as well as the complicated world of options. But before we get to that, we gotta cover some earnings here, Dennis. And that J.P. Morgan really didn't move a whole lot.
JP Morgan, actually, the implied volatility, which we'll get into,
Ooh,
was about
Dennis.
$2. So they were saying the options were pricing that there could be a $2 move in JP Morgan. Right now, it's a 20-cent move, only 57, actually 57.99. It just ticked to here, closed at 57.70. The stock reported $1.40 versus $1.33, 23.2 billion versus 23.82 billion. So a beat on the bottom line, but a miss on the top line. A little bit mixed there, and the stock's still trying to figure out where it wants to go.
J.P. Morgan usually moves a little bit more on earnings, and so those implied volatility a little bit off today. But let's just look at the early parameters in the stock. When the news hit, it went down, spiked down to 57, below 57.10. Actually, went to 56.98, but quickly rebounded to the $58 level. And I just was looking at the chart on this yesterday, and I would have been one that would think it would these earnings would either nudge it over 58 or break it down over 57. Kind of a tight range here. We did take out yesterday's low at 57.53. We are holding above it. I think I'd still keep an eye on that $57 level as major support and say that the uptrend is still intact above 57. Should be interesting, though, Dennis, if we get above 58. 58, 67, 76, the last two highs. You think people will be stepping ahead of those levels? Perhaps take a little stock off?
$58 going to be big here. Looks like somebody is sitting there with an iceberg order here at 58 right now. It just traded about 15,000 shares there just while you were talking, but the guy's not moving at 58, so somebody's trying to make an early stand at that level. What's the overnight high and low here since the report there, Joel?
Well, the overnight low 56.98, and now we're just bumping up.
Wow, so this traded down $1 already here
Yes.
today, almost $1.
Yeah.
Okay.
And now, I mean, so this is a pretty quick rebound here. 58. So those are your early parameters, 57 to 58. I think you chop around pretty good in the entire 57 handle.
And gentlemen, we are just getting Wells Fargo earnings. Whiskey Foxtrot Charlie Company reporting Q4 EPS of $1, and the street was around 98 cents. If you look at the chart, we did have an initial move higher, and now we're kind of trading a little bit lower from the close yesterday.
Yeah, it's just digesting it here right now. Just as those numbers came out, we were trading about flat on Wells Fargo. We are down 30 cents here, so they're not liking it, not beating enough here, I guess. 45.20 it is offered at right now. Went out at 45.56, so it looks like they're not liking the Wells number either.
Little jump in the pre-market. I'm not sure what time the J.P. Morgan numbers were released. Maybe it's 7 o'clock because you got to spike up to 46.34, believe it or not, and then it kind of settled into a 45.50 to 45 even range. We're breaking below $45
right now.
Yeah, Dennis, right now. Right here, right now on pre-market info, we are breaking through the $45 level. Not a lot there, Dennis. What do you see? What do you see below 45 there? 44
There's a
and
bid
half?
down at 44.77 in the pre-market, so there's not much in the pre-market here right now. But you're right. You got 44.91, which was the low of the year. We only had 9 trading days here, but January 2nd was 44. On the first day of the year, 44.91. And we take that out, and then you don't have much till 44.5, which was on the 19th of December. So below 44.91, definitely some resistance there. But they're trying to hold it there. It just took out a big offer, 45.01. It's still digesting this, so we'll probably have a little more information as the stock trades here in the next few minutes and digest this report.
And what was the size offer there?
There was 5,000, which is significant enough when you're still digesting. Often, right off these reports, you'll see only like 500 share bids, 300 share. You don't see much out there, just little guys, and nobody really, putting out major orders because they're still trying to figure out, oh, is this going to go up or down? So nobody wants to throw out a huge amount of size because you could lose a lot of money in a hurry as the report digests. We saw that in J.P. Morgan too. Early on in that report, this stock traded under $57. It's already back up at 58. So if you were throwing big size out, down selling at 57, you're already down a buck here. So, and actually now JP Morgan actually just took out that 58 seller that I was talking about and is moving higher here in the 58 handle. It's trading at 58.08 right now. So actually JP Morgan trying to rally here a bit. Wells Fargo just sitting down about 50 cents right now.
Do you think that the two lows from Monday and Friday at 45.63 and 45.45, you think that's going to be resistance with the close right there at 45.56? Think they'll get some resistance there, or is that too soft?
Well, from a technical perspective, yeah, I think that could definitely. It depends. You got to look at the volume too. We traded 48,000 shares so far. By the time this stock opens, I imagine we're going to probably trade 300,000 or 400,000 shares, at least, maybe even more than that. So you want to look at where this volume has occurred. Right now, there's a lot of volume occurring at 45. We always say the price has memory. Well, pre-market price has memory as well. If there's 50,000 shares that transact at 45, that means there's a lot of participants that now have a position on from that price. So that's where it obviously becomes support or resistance. It can help too, because so many people have that price on. That's where they'll look to jockey their positions once again. So that you got to keep that in mind too. So let's let it digest a little bit further here. Maybe come back to it in 20 minutes here and see where it's
Okay.
trading and see where a lot of the volume has occurred.
Just one quick note: 44.80 was your low on December 20th, so there is a minor support level under the $45 level. You did spot a bid at 44.77, so that's another level. 44.80 and then 44.50. So I think we've covered Wells Fargo well enough.
Let's move on to some of the other financials here that are having some sympathy moves here. We've obviously got one financial up, one down, so it's going to kind of be mixed here. We do have Citigroup after a horrible day yesterday. Citigroup was falling hard. It is bouncing back about 15 cents here this morning, trading at 53.87. It went out at 53.72, so a little bounce here in Citigroup. What's the chart saying on that one?
What are they due out? Are they due out tomorrow?
They are due out on Thursday.
Okay. The beginnings, let's just take a look and see what we've done in the pre-market, and then we'll look at it in the context of the daily charts. In the pre-market, seller just under the $54 level have had a couple highs in the 53.90s, so we'll keep an eye on that. Pre-market low kind of did that right after the close. Actually rallied right from the 4 o'clock close. Closed at 53.71 and then hit 53.51. It's been a March, kind of a tight range for this. Looking at this stock in the context of the dailies, whew, you got a ways to go to get up till till Monday's high, 54.66. That's another buck. Coming back on the downside, that the pre-market low and yesterday's low, 53.44, takes that out, Dennis. We got to ride down to the lower 52s.
And we are starting to see some weakness. Citigroup, just as we're talking here, was whacking those 53.87 bids. I'd have noticed that JP Morgan is now down trading at 57.80 with Wells down. If both JP Morgan and Wells Fargo end up going down, you got to think that's going to put pressure on the other financials as well. We have Bank America reporting tomorrow morning, and BAC is actually trading up 9 cents right now. But keep an eye here because funny things can happen if the Wells and JP Morgan both start going down, and JP Morgan's trying. So BAC actually trading up here at 16.52 right now, went out at 16.43.
Nice run in Bank America as of late. Uncharacteristic dollar move, explodes to the upside, over a dollar move from that 15.50 level. This one, from a technical perspective, looking a little bit weak. We had a low at 16.45 back on the 7th. We took that out yesterday. 1640, just to bounce off the low. I mean, not a lot of support. If they start to whoop these banks here under 1640, you could be looking at the lower 16s pretty quickly here, Dennis. But we kind of glossed over the market yesterday. What happened? The market went down. Why did it go down?
It was selling across the board yesterday. I'll tell you, there wasn't a lot of sectors to hide in. I guess there was a couple stocks. Merck was up. I was happy about that one because I got that in my portfolio. But other than that, holy cow, they were beating everything yesterday. You had stocks, even like conservative stocks with high dividends like AT&T, Verizon getting beat up. But then you had major selling across the board. Some of the Momo stocks were just getting annihilated. But the retail sector, that's really where it was taking it. Bring up a chart of like a stock like Kohl's, KSS. It's not one we talk about a lot on the show. This stock was down $3 yesterday on no news. It was just basically selling, just because, and actually Brentster bringing it up there too in the chat. It was just selling across the board in all the retail stocks. It's really the sector that maybe got hit the hardest.
There was no specific news though. I really
Not on Kohl's, no. There was some retail news yesterday, so there was some in the sector, but there was nothing. Lulu obviously guided lower, and we had, well, that was the big one in the retail sector was Lulu guiding lower, but the whole retail sector just got annihilated yesterday.
Coles did hit a good level yesterday. We had a low in yesterday's trading at 53.22. You had a low back on November 15 at 53.21. I mean, you had a 3-point beating and you got a 22-cent pop in the pre-market with the S&Ps trading up. I don't know how much we closed under fair value, but boy, oh boy, you do have a little hope here if you take out the 53.21 that a whole number like 53.03 is going to hold for you. That was a low on November 14th, but certainly not getting away from this level in the pre-market trading.
You want to talk about a big level? Bring up Nike right now. I want to show you this level. It's $75 level. Absolutely enormous and critical for this stock to hold. Yesterday's low was 75 on the kisser. If we go back into December, I'm trying to grab the date here on my chart. 75.42 is low December 12th. But then if you go back into October and November, you had multiple lows at 75 right on the button as well. So this $75 level is huge for Nike to hold. Below that, it looks like a lot of air, and I'm concerned here today because I think Nike might take it out.
Yeah, you were actually talking to me about this one, and you were licking your chops.
I shorted it ahead of it. I shorted a little bit ahead of the level because I thought it might take it out yesterday in the last hour, and it didn't, and it held. And I was like, well, I'm going to cover it just because I'm going to wait till it actually gets through the level. You don't want to sell something and predict it going through the level. Rather sell it when it goes through the level. So I did cover last night, but I'm licking my chops still here this morning.
And I said, I just had a feeling kind of weak close in the S&Ps that they might, juice them up a little bit. Did we close near fair value or right on it, or
let me go
did
look.
we close? Yeah,
SPX 1819. I think it's about $6. So fair value's down around 18. Yeah, we closed pretty close actually, right around 1812. So we're up. We're trading up about 4.5 points above fair value right now. So we are getting a little bit of a pop. This is concerning, though, like for the overall market, because a lot of times what you see is the people that really got under pressure yesterday, it's like, oh, my stock's back up a little bit, sell it at the open. So if they don't come in with their buying shoes on and get some follow-through buying pressure in this overall market, I'm scared we take out those lows at 18. What was the low yesterday, like 1809 or something?
Yeah, 1809.50 was the low. Yeah. Interesting, we're bouncing. We've had for the entire year, we traded in that 1750 range, 1750, and the higher end of the range was 1842.50, which we hit last week. I believe we hit that on Friday. And we basically traded the entire year's range yesterday.
Wow.
We took out the bottom of the range, right, which was the major support.
Yeah.
And now you're rallying back to a series of old lows that you had. Actually, you had 3 lows in a row at 20.50, 17.25, and 19.5. So call that whole area 1820. Call that major resistance.
And that's where we're at right now.
And what other retailer that you were all over yesterday, thanks to our good buddy, Mr. Sazi? When can we want Sazi? We want Sazi. When can we have him on again?
Yeah, and I shorted Starbucks yesterday right at the open there just because Sazi was downgrading the stock over at Bellis, and he seems to be just right a lot more than he's wrong lately. So I like the chart setup. I was like, I think I got a pretty good level to lean on up there at 78. I chased a bit. I wish it would have rallied a little bit because I wanted to add to it. Didn't get enough. Always on your winners. You never get this position big enough. I am still short Starbucks for full disclosure, but I'm looking at it here. I'm sitting up. I'm up over 2 $2 in the trade right now very quickly. So I don't want to let those gains get away from me here either. Above 76, I'd be concerned, but that was the big level before, was 76. It took that out yesterday. So I think that it might test that area, but I think there'll be some resistance up there. So as long as it stays kind of below 76, 76.10, I think I'm going to stick with my short.
Okay, what I kind of like too about his downgrade is that he had a $90 target on it, and he brought the target down to 75.
Yeah.
So if you were out there and I mean you're following this guy, maybe you got in. I'm not sure where he recommended buying it at, but you had a lot of chance. And I was doing an article here for the Benzinga, and I started the article and I'm like, well, it's a buck away from major support, and then I came back, took a little break. I came back to my article, and it was through major support. It took out that level. We were talking about perhaps it holding at 75.81, $76 level. There was a lot of lows there. 76 even took that out. Only a 20-cent bounce here in the pre-market. Not a big rebound for Starbucks at all.
And none of the stocks are really getting a big rebound here this morning. Obviously, the financials, they aren't popping that much because the Wells Fargo numbers kind of disappointed, and JP Morgan actually just trading up only 20 cents. But even looking, the only stock that is really bouncing today that I'm noticing in my filters here this morning is Google. And the reason it's bouncing, and it's bouncing huge, is because Wells Fargo is upgrading the stock here this morning. So Google is bouncing huge. It's up 16 points. Man, and look at this Google chart too. Look where it's going to open. It's going to open up right into all that resistance that we had before here too. This is an interesting call here for Wells Fargo. Brent, do you have the note, or could you hunt down that
I
note
was just
on
gonna
the...
say I don't have it pulled up in front of me, but I'm assuming they upgraded based on the Nest Labs purchase, which was disclosed last night. That was a $3 billion plus deal by Google.
And Jake had me rolling here this morning. He was and that company, like, you're gonna be able to turn your thermostat on or something just by thinking or whatever, or just if you think Google and you think, oh, I want to change my thermostat, then boy, it's cold in here. Then it changes your thermostat, and Jake threw in and buy Folgers coffee. I mean, they're taking over the world here. I think they're getting too big here. I don't know. I don't want to be.
They do a lot of different things
They
now.
do
They're
so
not
many
just
different
search.
things. I mean, this search thing.
Aren't they like dumping money into space research, like going out into outer
Yeah,
space
why
and
not?
stuff to do like a space program? Like they're gonna do it all.
I'm
They're gonna
actually
change the name from the Earth to Google.
actually looking at a couple quick notes on Google. Also, a firm named FBN Securities initiated coverage with Google at Outperform and a $1,300 target this morning. And then I'm checking out a SunTrust note right now saying that the Nest Labs purchase could raise sales by more than $3 billion for Google.
Wow. So they're loving this.
They
What was
really
the
are.
Wells Fargo price target? Did they give a price target too in their upgrade?
They do valuation ranges, so it'll probably be like a $20 range. Let me go hunt that down real quick.
Okay.
Wow, it's spiking up here into that old resistance. I mean, if you held this thing overnight, let's say, I mean, first of all, if you took it home long, I mean, this is you can't look a
Windfall.
gift. Yeah, this is a gift horse in the mouth, and I would say, let's look at the pre-market high, give some parameters here. I'm not going to let my personal opinion on Google affect the way you should look at this issue. 1141.84 has been the high in the pre-market. Not much volume here. Less than 10,000 shares has gotten it up to this vaulted level. Let's look at the daily chart here. Yesterday, you spiked up to 1146.91. That was 40 cents shy of the all-time high of 1147.32. So let's keep an eye at call that 1147. We'll call that a double top. And then also, if you want a secondary number ahead of that, 1141.23, all-time high in Google. You think there's some people who might be looking at that as a potential exit point, Dennis?
I don't know. I'm kind of on the same side as you, which makes me scared here, Joel. I think this is a rally that might actually find a few sellers here as well. What's the overnight high, Ben, on Google?
Yeah, the overnight high of 1141.84 is only 50 cents, 60 cents above the all-time closing high, which is 1141.23. So when you have the all-time highs like that, I also like to keep an eye on the all-time closing high, and that's 1141.23. So if you took this thing home overnight, and now you're getting a pop. I just think I don't know. I wouldn't be buying it off the open. How's that?
Todd in the chat is saying you can't be short Google. It is a scary stock to short there. I'm going to say the trend is still intact here, the overall uptrend here. And I'm not sure if I'm a big fan of shorting the stock either. If I was long the stock, would I be nervous, especially after yesterday? Maybe. So we're just saying from a short-term perspective, it might run into some resistance. Long-term, I actually have an investment in Google. I still think long-term it goes higher. But short-term here, it's kind of looking a little bit more scary here, just because of all that resistance. But if we can get up about 1150 and make new highs here today, then all bets are off. But there's going to be a few people off the bat here that took some heat yesterday, probably pretty happy to take off some of their short-term trading positions anyways.
So Wells Fargo raised their valuation range from 900 to 1,000 to a new range of 1,300 to 1,500. If you if you kind of take the midpoint of that at 1,400, that definitely is the new street high target.
Speaking of Wells Fargo, they have almost went positive here today. That's why we're saying, off the bat, let it digest, let the report digest. We've had 20 minutes of trading here now. Wells Fargo has now traded 178,000 shares, and we just trade a whole bunch of volume at 48,548. Also, JP Morgan is trying to trade higher here too. It's up 20 cents. So these reports are still digesting. We're still going to get an hour and 10 more of information before the open starts here. But right now, it looks like these financials are trying to come back here.
Also, Dennis, we did note that the low from yesterday was 45.45, a 45.56 close, and your low on Friday, it's 45.63. So we are at resistance now. Talked about if we did rally, if that would pose as a resistance level. I think it is. I think you're seeing a little. I think you'll see a little profit taking from all those people that scooped it up. Let's see, how did we get? Did we get to that 44.80 level? Let me take a look to see how low. See how low we got here.
I think there was somebody trying to make a stand at like 44.90. Wasn't
they
there?
did, and they were successful. Big volume traded on that. So yeah, let's early parameters now. 44.90 and 45.50. And Todd, I am not short Google yet.
Joel's been looking. He probably you like the options usually better. You probably play from the puts anyways, right?
Yep.
Yeah, because then you're limiting your risk here a little bit too. The only thing it's better to do if you're doing with options probably, and we'll get into some options talk when we get into George, the CEO of Options House, who's coming on 8:45. But sometimes better to play those with a put spread because the option premiums are so high. So if you are bearish, I mean, sometimes it's better to buy a put and then sell a lower put to try to offset some of that premium you're paying, because that premium get pretty crazy in a stock like a Google.
Okay, what else we got on the radar?
We have some other upgrades and downgrades here. We were speaking about JP Morgan. Well, they are upgrading Intel here today. And Intel, here's another scenario going to open up right into some major resistance. Intel trading up 45 cents at 25.95 right now. The high yesterday, 25.99. The high of the year, 26.04. Or I guess the high of, you can even say last year too. And then if we go back into April, we had a high of 25.98. So call 26 major resistance. We are right there right now. The stock could be in breakout mode, starts getting over 26, but it might struggle here off the hop.
26.22 was your high about 7 a.m. this morning. So this is doing this just on an upgrade, huh?
Yeah, and JP Morgan, big upgrade. When you get JP Morgan, when you get the guns upgrading it, this is JP Morgan, obviously a gun. So it's usually good to move at 50 cents. So it's probably priced in a lot of it. I just don't like the fact it's opening right at resistance. It needs to start getting up above there and holding above there. And you saying it went through there in the pre-market, but now real volume's coming in. It's traded 300,000 shares here, and they seem to be somebody's trying to make a stand at 26.
And when do they release their earnings? Are coming up pretty soon too. Maybe we'll have
Thursday night. So you're obviously going to have that moving it as well. So you got people jockeying a couple days here ahead of the earnings too. So I think it could eventually take this 26 level out. I just don't know if it's got the gas to do it here this morning.
Let's just take a look at just get it. We like to give. I know we always give a short-term perspective, but from a long-term perspective here, this chart is looking pretty juicy here. Now the $26 level, as you mentioned before, that was the area we hit 25.98 back in June, and that was the stopper back in June of this year. So approaching a major level here, a breakout above 26. But I just don't have this. Just don't feel this really is going to blast through 26 today. I think that this is going to be a down day in the market. This is just my opinion. You get
You
this
think
part.
it's going to be a down day in the market
Yeah,
because there's an update right now.
yeah. I just think it's fluff. I just think it's fluff here in the pre-market. Just people that took those selling balances MOC, take the home long. They're trying to juice the S&Ps up a little bit to dump those longs. But we don't see immediate follow through. Take out that pre-market high at 18, 19 and a quarter. I think we go back and test that 0950 low. We're getting in the chat here. J Dot, I haven't talked to you in a while here. TWC and what am I hearing? Are they
Had news breaking after the bell there yesterday. Bloomberg was reporting that Charter CHTR is looking to buy them for 132.50 a share. I believe Charter also confirmed that later too. So TWC, they're looking, and I'm not sure, if this is going to happen here or not, but I'm actually just reading through all the headlines here. And then CNBC, this is all from the Benzinga Pro. They've been logging it all. CNBC's favor, just finishing discussing Charter at 5 o'clock there last night, and Time Warner Cable purchase said Time Warner told Charter it would accept $160 a share. So TWC, they're looking like they want to get a little bit more than the 132.50 that Charter is offering, but it looks like the TWC could be in play here.
135 is what we hit in the pre-market, and we've pulled back, or that was actually after hours. Now we've pulled back to the 134 level, 134 to 135. So former all-time high in the issue. It looks like they've been up higher than this before, above 135. I think initially when some of these rumors came out back in December, I think this has been going on for a while, you got to spike up to 139.85. But, when something's in play, you just got to keep your eyes on the Benzinga Pro news feed. And, I mean, you can't fight a takeover. I mean, that's one thing I won't
No.
short into is a takeover. But what's your favorite character from Time Warner? With all the cartoons and stuff. Do you have a favorite character?
Bugs Bunny.
Mine
Actually,
too.
you know what?
Mine
Not even.
too.
You like Bugs Bunny?
Oh,
But then I might change that. I like the Coyote too. So
Wile E. Coyote.
yeah, I think I like Bugs Bunny because he always beat up the Coyote there. But the Coyote was always pretty good. He was pretty good at taking it. And you got to give that Coyote. He had a lot of determination there too. He obviously got killed a billion times there trying to get the rabbit, and just kept, or no, the Roadrunner. That was the Roadrunner. I'm getting all confused
Yeah,
here, Joel.
yeah,
It's the
yeah.
Roadrunner.
You're
The
right.
Roadrunner killing it.
Right. No, I liked when he used to say, "I'm going to Miami Beach." When he would pack up his suitcase in the winter and going to Miami. And I always wanted to go to Miami Beach after that. But enough of a digression here. What other upgrades and downgrades do we have?
Couple smaller ones. We've got Siri, SIRI, getting downgraded here at Barclays this morning. Stock, interesting enough, is shrugging this off because it's trading up 2 cents here. But if you like trading the little $3 stocks here, here's the stock that had a big pop at the beginning of the year, pop from 350 up to the 389 level, is pulling down here this morning, or is pulling down here the last few sessions, making 3 consecutive lower highs and lower lows. But interesting that today, even despite the downgrade from Barclays, the stock is trading a little bit higher.
This is kind of in play a little bit too, isn't it? Isn't Liberty Communications or Liberty Media? Aren't they trying to steal the rest of the company?
There was something on the headlines there. Brent, do you remember what the deal is with Siri and Liberty Media?
I think, well, I mean, Liberty Media has a huge stake in Sirius, so I think they're just sort of trying to get the rest of that stake.
Right. And there was actually a piece in Barron's about this, and they feel that they're trying to steal it at like a low price, and I think it was right around here, right around 369, 370, might have been a little bit lower, and I think they're holding out for a little bit higher price, but. Stock has had a nice run here. We can just look at that recent high. The move has been 390. I think we did that on an upgrade. Kind of a leak off the 390 level. Still haven't got to yesterday's high yet at 376. That's your minor resistance, and then you just got five highs in a row in the 380 handle. So coming into resistance here.
Couple other smaller ones. We've got GIS. food stock General Mills getting downgraded at Morgan Stanley here this morning. And GIS, the low beta stock, is actually trading down 60 cents right now. That's a pretty big move for a stock like this. I honestly think 48 bucks will come into play here and maybe hold, but which is about 20 cents away from where it's at right now. What's your thoughts here on General Mills?
We haven't talked about this stock in a while, have we? The old
No.
slow mover here. Uh, Looking at General Mills over the short term here. Let me take a look. Bearing down on support here. Wow, it did take out support. Down 61 cents. Who made this proclamation?
You got Morgan Stanley, so it is one of your guns downgrading. And I think that usually can knock 50, 60 cents off the
Wow.
price. But here we are, we're already kind of pricing it in right off the bat
Yeah,
here.
48.24 was your low on December 18th. So we are opening into a support level here. Just very, very few trades here. I just want to go back to Todd's question here about why short Google, and with the upgrades today. And I think that you have to put a certain amount of emphasis on a stock that sells off like it did yesterday, 20 points, the volume that it occurred during the day, and then just because you get one upgrade by a company, I just don't think that upgrade's worth 18, 20 points. Also, you have traded up to the former all-time high of 1141.24. So I guess I'd be more apt if I had this long to sell, into it if I had witnessed the price action that it had yesterday, and just to, I guess it's also I'm just like a pure contrarian, but let's just say that you went with the Goldman up, raised the price target. It wasn't an upgrade, but you raised the price target on Twitter yesterday. Well, if you would have bought the open, you pretty would have bought the high of the day, right?
Yeah.
Uh, so, I mean, you can put emphasis on these things. I just think using the upgrades and downgrades, you can use them both ways. I mean, you can use them to help you exit a position, or if you want to enter a position. But just using this Twitter example on the Goldman raise, they juiced it up $3 off the open, opened up at 59.98. Went up another 40 cents and then just nosedived down to 57.21. So it's just a way that you need to interpret stocks with to use it as an exit or an entry point. And I was just thinking, wow, what a free gift here if I was long Google trading up $18.
It all depends on your time frame there too, Todd. Like we were saying before, if you've been invested in Google for a long time, are you going to get scared that it's starting to form some resistance in the 1140s? Probably not. I think if you're long term in this thing, I think I'm probably sticking with it until it's under 1100. But if you're a short term, swing trader, there's a setup there, and the setup is because you have defined risk. You can look at the whole 1147 area where we've topped out. That's been the high a couple of times here. 1147. 32 was the high on the 8th of January just this year. And then the 13th, which was yesterday, we got up to 46.91. So you have, a potential double top in place. Now you have an upgrade opening you up into some resistance. We are 10 points away from there now. When we started talking about this, it was 1139, and we were looking, will we run into resistance in the 1140s? I think we do. Maybe not even get up to the 1140s there. So that's, just the scenario for you. I think there's a few short-term swing traders that might be looking at a potential setup for a short there. But that's, just opinion. That's why we have a market. It's always somebody bullish, somebody bearish. And that's why you make trades. So either way here, if you're in it for the long term, I think it's still, got room to move higher. Short term, I think it might be a little toppy in the 1140s.
We haven't talked about the 3D printing stocks, and starting with the major one, Triple D, Dennis here. Your initials trading down in the pre-market. Someone hopping off the 3D bandwagon, or is this just a little bit of profit taking?
These stocks are starting to look broken here too. It's definitely a concern when some of your market leaders are starting to become some of your market leaders on the downside as well. And we always know whatever stocks are the strongest going up are usually the weakest when the market starts to turn and come down, because everybody's sitting on huge profits in these things too. I mean, everybody's up in this thing. This was a $50 stock a month ago, in October. So basically, in the course of 3 months, the stock has doubled. But it's tried to get through this whole 96, 97 area multiple times. 3-4 times tried. Then yesterday we came down to critical support at $90. Today we are trying to take out critical support. I'm saying trying because it's still a pre-market right now. We haven't seen what's going to happen in the regular session, but right now in the pre-market we are below 90, which is 89.80, and that looks like a little bit of a concern to me.
Right. This look at the pre-market low here did dip under 89. Even got a lot lower than that. Got closer to 88.01. Now you look at the dailies here, and you can't ignore that former support level. Hit bounced off 90 3 or 4 times since the end of the year. So it's critical that you need to get back over that $90 level. That's resistance because that between 85 and 90, Dennis, you do have that one little low sticking out there to save you at 88.05, which coincides with the pre-market low. But boy, there's not a lot in there down to 85. So we'll see how that reacts. And
And the
then
reason here, though, Joel, the reason is we should say, we started with Triple D there. You liked it because my initials, but the reason Triple D is trading down is Stratasys SSYS did lower guidance here this morning. And I was going to get to that on the sheet, but it lowered guidance. Estimates for 2014 were up at 233. They are lowering guidance here this morning, at least on the bottom line, to 215 to 225. And the stock is trading down $6 right now, SSYS, on that lowered guidance.
all right, you have to hit these things when they're going up here, right? As opposed to when they're going down. Let's look at. I get this one right. SSYS. Boom! I got it right. Woohoo! The Earth is spinning on its axis here.
Joel's dyslexia there. He always gets the S and the Y mixed up. There's too many S's in there for you.
We took out the 124.22 low on December 24th. We've taken that out. Do see one minor support point at 122.27. That was low on the 20th, but we could be getting all the way down to the 120, under 120 here. You had another low at 119.21. And who else is in that space? We have XONE, correct? That's
You got it. You're getting good at these ticker
I am
symbols.
just I know these stocks. Let's see. I just can't buy them. Let's see here. The X1 company. Let's see how that's trading. And
What a reversal for that yesterday. That thing was looking strong, making new highs on the move, got up to $70, and then, oops, the bottom fell out of it. And all afternoon, stock went from 70 to 65. So you can see how quickly these things can turn and how ugly they can get. 65 is huge for this thing to hold. It's trying to hold it today, but with the SSYS lowered guidance with Triple D, if it takes out the 90, man, I don't know. You got to think that maybe the 65 could go.
is this a key reversal? I mean, if you made a new all-time high and then you came back and closed below the previous day's
And it's
low.
not an all-time high because we were up there in August, but
Oh,
it is a
really?
new high on the move. A
Okay.
high since we made the low back in October of $43. These things have just been on a tear. There's so many people sitting up a lot of money in these things. If the market starts selling off again, they're going to whack the stuff that was the strongest because that's where people are sitting with the most gains, and everybody always wants to sell their gains. They don't want to sell their losers. So these stocks are definitely prone. If we do start to get a sell-off in the market, these stocks could start getting sold too.
And don't fret if it's down 83 cents because you could have been watching this thing when it traded down to 62.44. Traded down to 62.44. That must have been when the initial news hit with Stratasys. But I just want to go into, and we talk about this a lot. Yesterday was just a great example of sympathy trades. And the one that we really missed here, and we even talked about it during the show, was this Brown's Foreman, and on this.
Oh, yeah.
Yep, and that thing gapped up just a little bit, So if you didn't want to mess with the Jim Beam, which ended up coming back down below that price, it was trading over it. The Browns Foreman just gapped up just a little bit, not even gapped up 6 cents, and then it just made
Wow.
that low, and then it just turned around and rallied on almost double the volume that it had on Friday. So if you were maybe DJ picked that up because I know he looks for these sympathy trades, and then also if you didn't want to trade the hot rod Starbucks, the one that had the big news on it. Green Mountain Coffee Roasters got roasted a little bit yesterday. I noticed that had a sympathy move as well. And a little bit lower class, Dunkin' Donuts, where all the cops hang out. That sold off. Well, I'm not saying cops are low class. I'm just saying it.
Detroit cops like Tim Hortons.
Oh, really?
The Canadian. You got to give the Canadian some props somewhere there in there, Joel.
In Duncan yesterday, just want to give a one key level for you holder of Dunkin' Donuts yesterday. Hit 46 yesterday, 45.96 low. That coincides with a low that you had 45.90 back on December 13th. So a couple sympathy plays there.
Yeah, that BF.B, those are sometimes the best ones. And we did mention on the show, you had actually brought up just what stocks, because Jimmy Beam was getting bought out for the 83.50. And Joel's like, well, which other stocks, could be? So I'll give you some props there because you did mention the Brown Form and BF.B. And man, if you bought that open at 75.55, stock was straight up. You took no heat and went straight up $2.50 for you. So interesting. Constellation Brands, which had been running it, really didn't. It had a little sympathy run right off the bat, which is ST Zebra. It opened up around 80 and ran to 81.5, but then it pulled back and just consolidated around the whole 80 area. So it didn't move up as much as some of these other ones. Man, we've got some movers here, just stocks just bouncing all around here. I got Merck trading down all of a sudden 70 cents after its big run yesterday. But bring up that Merck. Let's talk about it because the $50, it had been consolidating just under 50. There'd been some institutional selling. A guy that just kept coming back with hundreds of thousands of shares to sell at 50. Well, I guess he was wrong because the stock popped $3 yesterday on that. What was the news there yesterday, Brent, on Merck? That really made it pop. It was something with some drug, right?
Yeah, I think it was a favorable trial here. You are pulling back here. Not a lot of volume compared with yesterday. We just made a 52 and a quarter low here, so we'll keep an eye on that. Do have a small gap from yesterday's trading in the issue between 50.07 and 50.79 here. Now that we got this dip below the close here, 53.12, I look for that $53 level now to post some resistance as well as the close at 53.12.
Merck announced the rolling submission to the FDA of the BLA for MK3475. BLA stands for Biologics License Application. They said that they expect this application to be completed in the first half of this year. I believe that was a little earlier than expected. I think the street was looking for the second half. So you got, a good 2-3% jump yesterday.
Yeah, that's just a huge move for a stock as thick as Merck, because usually Merck has like a 40-50 cent range on an average day, sometimes a 70-cent range. Stock like that pops $3. I think you're getting some profit taking here this morning. I'm not sure if there's a headline or not knocking it down to 60 cents here because the market is trading higher, but definitely some profit taking in Merck here this morning.
Dennis, OPIT, have you ever traded that stock here? GGB is popping in with the chat here, and I'm trying to bring it up. Am I getting this?
OPTT?
Is it OPTT?
Yeah,
Oh,
OPTT, Ocean Power Technologies. That's popping up huge here right now. It's up 47%. If I go to my leaderboard here on the stocks that are up the most, it is right at the very top of it all. This is your stock that is up the most here today, up to 47%. The headline, let's go to the trusty Benzinga Pro and find out what is happening with OPTT.
trying to bring it up here on my...
Earning, or actually, guys, can you go hunt down what that OPTT is?
Looks like we had a release around 7. Ocean Power Tech reporting a funding deal with Australia. They're going to get 66.5 million Aussie dollars. This is effectively a grant from the Aussie government.
Ooh, okay. Well, let's look at this. 361 is what we've hit in the pre-market. We'll go to the pre-market chart here so you can see. Oh, I lost it. 361's been the high in the pre-market. Now, if you go to the dailies here, you did have a similar spike in this issue going back in, what was that? In October here, you had a spike up to 380. So what I'd be looking for, if I would not be shorting this thing ahead of the pre-market high, 361 up to that 380 level, you have to give it some room. It had a similar spike here back in October. So I'm not sure what the news was surrounding there, but it has found some resistance in the pre-market. You got to give it up till if you are shorting it at that 360 level, you got to be aware of that 380 top as well. If those numbers don't come into play, and let's say it wallows here at since it hit the 360, you've hit 340. if you don't, like within the first 15, 20 minutes, if you don't take out that pre-market high, I think you might see some profit taking. Dennis, you got any opinion on this one?
I'm going to move on because we are running so short on time here. I just want to talk quickly. They've been talking in the chat about GME here. And yes, GME is moving this morning. GameStop down considerably here in the pre-market, trading down $4 right now. Just going to the chat. They actually lowered guidance here today. I'll grab those numbers for you. They are lowering Q4 earnings guidance. It was up at 214. They're lowering it to $1.85 to $1.95. That's going to be a big miss. They are also lowering full year guidance. It was up at 325 before. They are lowering it to 296 to 306. So GME not looking good here in the pre-market.
You just have to take a look. If it doesn't hold this 41 level, you had a low at 39.46 back in June. Okay, we are going to take a quick break, and then we're going to have the president and CEO of Options House on, George Ruhana. We'll be right back with you. Welcome back, traders and investors. We have a very special guest on today, the CEO at Options House, George Ruhana. And George, I hear there's a rumor that you're a Michigan man.
I am.
Okay.
I am.
We need a few more of those around here because we got Shaky Jake, who's the big state fan. But welcome, and Dennis, why don't you give a shout out to George?
How's it going there, George?
Great. Thanks for having me on.
Okay, CEO at Options House, a big position there. You just want to give us a little bit of your background and history in the markets?
Sure, I won't bore the people on the line too much, but I between my junior and senior year of college, I was an intern on the Chicago Board of Trade floor for a firm called O'Connor and Associates, which was it was one of the top 3 or 4 derivatives trading firms in the world at the time. And after school, I came back and I worked in interest rate options for both O'Connor, which became part of Swiss Bank Corp, and another partnership called CRT, which became part of Nations Bank, another big Chicago trading firm. So I was on the floor for about 5 years doing arbitrage, on floor versus over-the-counter options in U.S. government treasuries, in the treasury options. And then after that, I knew the people who started Peak 6 Investments from O'Connor because they worked there as well on the equity side. And in 1999, during the internet boom, it seemed to make a lot of sense to get out of interest rates and into equities. And so Peak Six was pretty small at the time. There were probably 10 people there. And so I moved over and started upstairs on a volatility arbitrage desk for Peak Six, which was a couple people, and we built that business out over the last 15 years, and I did a bunch of different things at Peak Six, from managing all the traders to setting up institutional relationships. We were a big wholesaler of volatility options to the big banks. And after that, about 5.5 years ago, somebody got the crazy idea that I should run Options House. And Peak Six is the sole owner of Options House, and it had been out for about 1.5 years with public customers. It was started by one of my partners kind of end of 2005, 2006 to build it. Was open in the beginning of 2007, and then I have been running it as CEO since September of 2008. So I started, and Lehman Brothers went bankrupt about 2 weeks later, and all hell broke loose. And so it was a really interesting time to take over a brokerage when the SEC sent out a note that said you can't sell in the money calls or buy puts naked, and it's going to start tomorrow for financial stocks. So I've been in the business for about 20 years. I've been in Options House for about 5.5. Before that, it was all on the proprietary trading options, volatility arbitrage of some variety.
I was on the trading floor too. Do you still remember the hand signals? Like with my wife still remembers them. Like I'll say, how much money do you need, and I'll signal, $100 or something like that. I still make my kids do it too. Do you still remember?
Yeah, I know them all. Our offices are in the actual Board of Trade space where we traded. Like the Options House offices are in the original SIBO floor on the 7th and 8th floor of the Board of Trade, and the Peak Six proprietary trading offices are the actual Board of Trade trading floor. And so I'm here every day. And so, yes, I do remember them. I think it took me longer to figure out the hand signals than it did to figure out how to trade. But yes, I'm still down here.
So, George, we're going to go into a little bit of a topic here today on implied volatility here. And obviously, with all your market background, all your options background here, we're hoping a few of our listeners can learn something here today about that and how, obviously, to maybe make some trades knowing that. So let's just start here. What exactly is implied volatility? So
implied volatility, like the math behind it is most people have heard of Black-Scholes as a pricing for options, and there's a handful of inputs: the stock price, the strike price, the time to expiration, interest rates, dividends, and volatility. If you put all those numbers into the Black-Scholes formula, you get the price of the option. What you do with implied volatility is you actually have the price of the option, right? It's the market price of the option put into that formula with the other inputs, and the only thing that comes out then is that you back out volatility. So it's the market's perception of what volatility is going to be on a go-forward basis. It's the market's perception of what volatility of that stock will be going forward.
And that's the big difference between historical volatility, which would be like something that the market's done and priced in the past. And implied volatility is what the options are telling you that the market thinks is going to be the volatility in the future, correct?
Right. Historical volatility is just taking you figure out, are you going to look at close, or open, or high, low, close, whatever the metric is for which volatility you're going to look at, and you put that into. You take those stock prices over whatever time frame you want, and it kicks out. That is purely a math equation to say the volatility of this stock for this time frame was X. And so historical volatility looks back, implied volatility looks forward, and then people who what you would call volatility arbitrage traders, Peak Six being one of those firms on the proprietary trading side, is people who look at the differences between what the market implies and what they think historicals are and what they think implied should be, and they trade the difference between the two.
Okay, and what causes implied volatility to go higher or lower?
What causes implied volatility to go higher or lower? I think there's a handful of things you can talk about. And so I would say there's a number of things. There's a little bit of art to this, but there's a handful of reasons, right?
Okay.
So One is when you're talking about single stocks, every stock, especially the big cap stuff, is also part of the S&P, right? So if index vol goes up a lot because there's fear in the market, you're going to see as a rule, the basket of those stocks tend to go up as well because there's a group of people who arbitrage the difference between the individual stocks and the indexes. So if index volatility goes up, you would expect to see the big cap stocks, the Apples and the Googles and Microsofts of the world tend to drift up as well because there's a bunch of people, if they don't, will buy volatility in those names and sell volatility in the indexes. So overall market volatility has a factor. In single stock names, supply and demand has a factor. Like, this isn't very scientific, right? If you have a name where, especially if the name's not incredibly liquid, who has an axe to buy, a large amount of options, it can move implied volatility a lot higher. Like, one thing to remember is, think about it this way: if everything's equal in a stock in an expiration, the higher the price. If it's the same option, if the premium of the option goes up, implied volatility is going higher. That is a relationship. If you hold everything constant and an option's worth $5, and then it starts trading 5.5, its implied vol is higher. So if people buy a lot of options and they push the price from 5 to 6 because they have more than the market will sell at 5, volatility is going higher. Same on the way down. Another reason would be sort of perception of risk in the name. So if the name becomes hot as a takeover candidate, the short-dated implied volatilities will move higher, and a lot of times the long-dated implied volatilities will move lower because if the deal is cash volatility, there's a huge move, and then the cash piece takes long volatility lower. And the other big reason that I don't think people think about is once the news is out, if there's a big anticipation of news, call it earnings in a stock that moves a lot on earnings, call it a Netflix or a Tesla, once the news is released, usually whether the stock goes up or down, a lot of times implied volatility is much lower after the fact because the news is out. Mm-hmm. So there's a sort of anticipation of the event, and so implieds are high, premiums and the options are really high because of this move. And then if the news comes out, whether the stock's in the same place or moves to one, in a reasonable range, most of the time implieds come back down because the news is already out and the stock won't have that big a move again. Now, there are times when, the news is got more news behind it or changes perceptions of the stock so much that implieds do go up. But, if you said the majority of the time, there's a build-up in implied to the news if it's supposed to be a big market-moving event, and then once it's out, implied come in. Okay. So those would be my sort of a handful of examples of where that happens. So
from what I can infer that you pay attention to the volume as well. If there's notable volume in a strike or at a particular option, I know we make notes of that on the Benzinga Pro news feed. So you pay attention to the volume as well.
I do. I would say that, it depends on not all volumes the same. If someone prints, 10,000 call spreads that don't really have much volatility in the market, it's 20,000 options, but it's 10,000, they're buying 10,000 and selling 10,000. That's not that won't change volatility dramatically. But if someone comes in and buys 20,000 at the money options in a stock that's not that liquid, that's probably going to push the market more. So it depends on what the trade is, but if it's one way of, it's just buyers, customer buyers or institutional buyers, they can move the market.
Okay, we've been talking about implied volatility here quite a bit. How can traders use implied volatility as a trading tool?
So I would say I think, for traders and investors, there's a couple things you have to think about. One thing I would say that they can't do is, for the most part, is trade volatility arbitrage like the big professional firms do, mostly because of the margin rules, because all of the Black-Scholes and all the pricing models are based on dynamic hedging. And so if you buy the call, you sell the stock, and then you constantly re-hedge your positions, that's hard to do as an investor. The margin rules aren't set up to actively trade stock back and forth, and it's expensive. It's pretty hard to do. Taking away and I'm waving my hands at all the things like, oh yeah, Peak 6 has 150 tech people who work on systems to do that and automated execution and all that. It's more around, it's just the way the margin rules are set up. Doing that, because you're really in that vol arb space, you're really trying to pick up small intricacies in the market. And so costs and all that stuff matters. But for investors and retail traders, it is a really good way to start to think about what should I do as a trade and how should I structure a trade. I think the things you can do are, one, if all of a sudden there's a big change in implied, if you're watching it, you might want to ask what's going on. That's right. A good place to start. And figure out if there's news or an event or earnings are coming up. Two, you can look at where historicals are, where implieds are, and you have to think about where your view is. And if you think something's overblown, or look, I want to own the stock for the long term, and implieds have become really high, but it doesn't really change my overall perception of the stock, that's probably a candidate more for a strategy that would sell options, because volatility is high, so you would sell options because premiums are higher than you would think they're probably supposed to be. So it's more the candidate. The simple example is buy the stock and buy right it, sell the call, the at-the-money call, or the upside call. Whereas if you thought implieds were really, really low and you thought the stock was going to move a lot, maybe what you would do is buy an in-the-money call instead of buying the stock, because you're not paying that much extra premium for the volatility value.
Right.
And so I think of implieds and historicals and the relation, as well as what the investor's perception is on a go-forward basis. If you look at the three of those and you come up with a little hypothesis and you're pretty fluent in different option strategies, you pick the one that fits. And so if vol's really low and you want to express a long view of the stock, you may buy in the money calls. But if vol's really high, you may buy the stock and sell calls above it. Those are, or you sell put spreads below it, and if the stock goes up, it's fine, but you collect premium. So I think I am not a fan of people who say, and no offense to anybody listening, I'm only a premium seller, or I only sell call spreads, or I only buy stock, or I only do buy rates. I think it matters what's going on in the market. And you can express your view long delta or short the market or market neutral different ways. And I think you use vol to pick your strategy. If you know all the strategies and you know the vol relationships, you can say, I should probably be a premium seller right now, or I maybe want to own premium because I think the risk reward is better that way, versus I always sell premium. Because if you could take it to an extreme and said, if vol went really low, would you sell the $5 out of the money call for a year for a nickel? There's no point, right? And so you have to figure out where that is.
I completely agree with everything you're saying here, George. I've been a prop trader and trading options for about a decade here now, and I always say when volatility is high, I want to be a net option seller, and when volatility is low, I'm a net option buyer. Like right now, volatility has been relatively low, especially when we compare to where we were in 2008, 2009. And I've been playing this, trying to play these little strategies, like little out-of-the-money options, like almost call them like little lottery tickets right now, because you can pick up so many little options for like a nickel or a dime or something very cheap, and it's like, well, there's probably a low chance that happens, but I feel like the chance is better than than winning the lottery. So it's almost like a lottery ticket strategy. Do you agree
I
with
would
that?
say I think there's a couple things there. First, in addition to implied vols being low, interest rates are zero. So options aren't priced on the spot price of the stock; they're priced on the forward. And historically, if interest rates are 5 or 6%, the forward's further up. So the forward on a 6-month option might be 2 or 3% higher than the spot. But because of the fact that, and so you could buy right stocks and get a little more premium for those upside calls, partially because vol was higher and partially because the forward price was higher.
Right.
But now with dividend yields kind of high and interest rates very low, you get a forward that's basically on top of spot. So those upside call, the premium in those upside calls is lower than it typically is for both reasons. I think you're right in terms of So that makes the break evens on some of these out of the money calls that are trading at low dollar amount better than they historically have been. Now, I would say the one thing that I would caution anybody in, because both we see this at Options House at times, is, and you say everything within reason, right? Like
Yeah.
you can't put 100% of your portfolio value in out of the money teeny options because you're probably going to lose all your money. Like, but if you say for 5% of my portfolio, I'm going to do this
Gamble.
because I think it makes sense, that makes sense. Doing it for 100% of your portfolio absolutely doesn't make sense. And so that's where I think people get in trouble, as I've seen over the last 5.5 years, is this idea of what's too much leverage. Like, options are great tools to structure things, but if you use all your buying power in one trade, it's different than using all your buying power to buy SPY. Like, there is an expiration on this stuff. So as long as people understand that the leverage aspect of options, they can do things like that. But if they just put all their money in one out of the money option for 2 months, it's not going to end well most of the time.
George, we have some excellent questions coming out of the chat here, and I'm just going to throw them at you, and then you can answer them. We're talking a lot about implied volatility. It's a number it comes from. Do you have your own formula for it? Where do you actually get the implied volatility for stocks? Number one, that's number one question. Number two, there's a lot of volatility in the weekly options. How are your customers faring in the weeklies? And do you think more stocks will get weekly options in the near future?
Okay, so first of all, I mean, there's a bunch of different pricing formulas and a bunch of people use a bunch of different things. For the most part, from a retail investor standpoint, like the difference between a binomial tree model and a Black-Scholes model and another model is so tiny, it doesn't really matter. Like, there are certain instances or really long dated options where it matters, but for the most part, if you use a sort of a consistent guide and it's calculated correctly, it is what it is, and it shouldn't be that big of a difference. So I wouldn't get too hung up on which model and who does it. We use a relatively generic one at Options House, and so that's one piece. The second question. What was the second question?
Just how are there's a lot of volatility in the weekly options. Just how are your customers faring in those, and will there be more weeklies for different stocks?
So I would say our customers do utilize the weekly options quite a bit. It has been probably the biggest product release over the last 5 years in terms of changing how markets are done. I think, customers, again, it goes back to how do they use them. And some customers who use them to do either calendar spreads or protect a position into earnings because it's a really short-dated option, there's not a lot of premium, or things like that, they can use them. It's another tool that can only make them better if they use it sort of in moderation. There are customers, unfortunately, at times who probably over-lever into weekly options, and it's 50 times a year, it can be riskier. I think the last piece that we work with our customers on a lot is, especially if you're going to trade options that expire every week, the expiration process is a little more complicated than people understand. And there are times when people, if they don't fully understand the expiration process, they can get in a little bit of trouble. Like, I sold a call spread, and so I have $1 worth of risk. Well, that actually isn't the case if you sold an SPY call spread. And this can happen after the close because people exercise their options well after the close. So you could sell it. It could go out worthless. You're like, hey, I sold this thing for a quarter, this dollar call spread. Woohoo! I made a quarter. The problem is if this SPY goes up to $1 into after the close, everyone's going to exercise that call you were short, and now you are short a lot of stock over the weekend that you can't do anything about. And you don't even know how many you got till the weekend, and there's a bunch of risk around the actual expiration piece, so that not closing options and hope they just go out, you are giving up on the short side some real optionality into the close. It doesn't happen all that often, but I just don't think people even understand how it can happen, and that can be tough. So I think leverage is always the bigger key on here. But like I said, it's an extra thing people can use to do things. And the weeklies are great for short dated, like there's an earnings event and it gives them the opportunity to make a trade around the earnings without having to think, well, what's the long-term volatility of this going to be after this earnings news is out? It's just around that play.
We got one question here coming out of the chat, just on implied volatility. Again, I guess we're taking it back to Carl here in the chat. It's just everybody's still trying to get a grasp on it. Just asking if a specific stock shows an implied volatility of 45% at a strike, what exactly does that mean?
It means so I think there's two pieces here, right? Theoretically, it's the volatility of the stock, not the strike. Now,
Okay.
Each strike has a different implied volatility because of something. I mean, most of the industry calls it skew. So in a typical stock, not in every stock, but in a typical stock, upside calls will trade on a lower implied volatility than at-the-money options, which trade on a lower implied volatility than downside puts. And if you think about it, it's a little bit of supply and demand. For the most part, people own stocks and sell the calls, or they buy protection, right? So downside, there's more buyers. Upside, there's more sellers. And again, not in every stock. So implied, they're different between the two. But theoretically, it's actually the implied volatility of the stock. So it's saying this stock for this term, the market is saying it will move on this annualized volatility. It's a measure of the stock. For most people in the industry that I've dealt with, people think of what is the true number as what is the at the money number. So if the stock's trading $100 with, in the forwards right around there, it's the 100 strike. What is that implied vol? And then the differences are sort of accounted for from the at the monies based on skew. Calls are trading lower, puts are trading higher. So I would say that is, when you think implied volatility is a volatility of the stock, and so theoretically there should only be one volatility across every option strike for that term structure, right? Because there's only one stock, but other factors come into play.
Okay, all right. So we're getting, pretty in depth here on it. I don't know, if you want to, add anything in here about, standard deviations and how it relates to implied volatility.
Well, I think it's interesting, right? So if you say the implied volatility is X, or you use implied volatility, or you use your own historical vol number, you can calculate. Off of that, you can calculate what the standard deviation is, and from that, this is like statistics in college, right? You calculate the standard deviation, and you can also, with that standard deviation, you can create a range based on the standard deviation. And so you can say this is like a confidence band, and so the problem with a confidence band based on market implieds is if the implied's wrong, the band's wrong. So you have to you can use, I think it's a good proxy. The market's saying with a standard deviation of X, in a vacuum, the band of confidence on the range of the stock is this. And so, but it isn't, but if volatility if implied or wrong, that's what the market's saying. But if implied are wrong, that's not the band of the stock. Do you know what I mean?
Yeah,
if
I
the
do.
Stock moves low. So I think it's the market's perception. So, and again, this is an interesting thing. I'm going to really bore everybody, but like one of the interesting things about the Black-Scholes formula is the Black-Scholes formula is actually a physics formula taken from a physics formula that explains how heat diffuses through the atmosphere and so this is real. These numbers are like volatility numbers and standard deviation numbers off of volatility numbers. This isn't a particular to options trading. This is math. There's real math behind this that across everything. So when you say implied volatility of a stock is X, you say then the standard deviation is Y. And if the standard deviation is Y, confidence bands are here.
Okay, let's talk a little bit about the Options House platform and the advantages for options traders. I mean, I know you guys have the 150 free trades, but tell us a little bit about the Options House platform and some of the things that options traders can use to their advantage.
Well, I think there's a bunch of things here. I think globally the nice thing is it's a place that's set up for active stock and options traders. And so if you are, where some other places are set up for different things. And so if you say I'm at a broker XYZ and their main business is 401ks and retirement planning, and then they do this on the side, it's on the side, where for us it's front and center. So it's, I think, a little bit of its focus. Separately from that, what do you get? You get, obviously, real-time options quotes, the Greeks. We have a great risk viewer so people can see their risk and break it down by dollar delta and normalize things to the different, how much vega they have or sort of dollar delta risk. We have something that called a risk score, where we've kind of picked like the top 8 or 10 things that get people in trouble. And we look at your portfolio automatically and relatively in real time, and it pops. So if you put on a trade that causes one of these factors to go up tremendously, your risk score will go from 2 to 8, and it'll be red. And then there's an explanation of why. And so it's, again, because it's focused on trading options, the tools, like the risk profile stuff, the tools, they're more options focused than you would see in other places. And for stock, again, it's all like most other places. We have a good research tab that gives a bunch of information on indexes and where they are in the individual stocks, and we rolled out real-time charts this year that are more embedded than our old ones were. So. And then I think on the go-forward basis, the thing we're really working on now is alerts that are based on more than just like the price goes up, doing different things around alerting to give people more information and making it multi-device. So we have native apps on iOS for both the iPhone and the iPad, and then we have Android phone and tablet apps. So we have all the suite of native apps.
Okay.
And then we're going to make alerts sort of flow hopefully seamlessly through, and this is sooner rather than later. We have alerts now, but as we replace them with this whole new setup, it's going to push notifications on your phone to wherever you are. If you want it via text or you want it via push, and you can act upon it. Like, those are things I think, because as the world changes and people may put their trades in on the desktop in the morning but use their phone during the day, because some people have to work in jobs other than trading. And so how do you make that experience where they can put it in, and all of a sudden an alert pops up and a push notification that's like, this happened, do you want to make a trade? And you can trade quickly through the app. Like, integrating that is experience, because people want it to be easy and they want it to be seamless, and that's where we're going with it.
Okay, and I know it's on the site, but you get the 150 free trades, and I know this is on the site, but just your pricing policy. I mean, do you need to be a big trader to take advantage of the prices at Options House, or is
I think we are. When I started, it was a little bit more skewed toward people who traded really large contracts, but we instituted a second options pricing plan. So.
Okay.
One plan is $8.50 plus 15 cents a contract, so on the option side. So you get, if you trade 100 contracts, you're talking about $23.50 for the trade. And if you look at all the other brokerages, for the most part, they're a multiple of that number. So for bigger people who trade 50 lot spreads that end up being 100 contracts or 100 lot spreads, we're significantly cheaper. The other piece we did, though, is we came out with 5 options for $5. So you can trade up to 5 contracts for $5. So it's another way to let people who don't trade big contract sizes to be in a place where it's a much cheaper trade than it had been in the past. And finally, on stock, we're $4.75, so we're significantly cheaper than the big brokers on stock. So it doesn't have, you don't have to trade 1,000 lot option trades at Options House to be welcome here. We want you all. So I think it is a place where the commission savings add up over time.
Okay, all right, George. Well, this has been a really a great interview. You've covered a lot of different topics here on the options markets. We really appreciate you having on. It's good to have someone with a lot of experience in the field come on and discuss the intricacies of it. Thanks for coming on again. I really appreciate it, and we'd certainly like to have you on again.
Anytime. Thanks, guys.
Okay, have a good day.
Take care.
All right.
Bye.
Wow. Man, my arm's tired from taking all those notes from this guy, huh? That's something else. All right, we're going to shift gears a little bit, and we're going to go to Mighty Joe Young with the morning headlines.
Well, thank you very much, Joel. And ladies and gentlemen, that was George Ruhana. A little round of applause for George Ruhana for coming on the show today. That was really fantastic. We appreciate him taking the time to come on out, give us a little chat, some insight. Moving into today's editorial headlines from around the globe. Apple patent to offer solution to touchscreen input errors. An Apple Insider report says the company was awarded a patent which offers a solution to accidental input errors that users may encounter when interacting with a touchscreen while moving, citing images from a patent filing. Startup Wind Mobile apparently has dropped out of Canadian spectrum auction. Wall Street Journal reports that Canada's big three wireless companies, BCE, Rogers Communications, and TELUS, will have at least one less competitor for spectrum as startup Wind Mobile has dropped out of the coming government auction for 700 MHz band spectrum. Shell to sell some of its North Sea oil fields. The Financial Times reporting that Shell is planning to sell some of the North Sea oil fields as part of a $15 billion divestment over the next 2 years. The company will divest mature upstream assets in the North Sea and elsewhere, sources say, as well as more of its refining portfolio and some projects that have not yet reached a final decision. Apple may bring back the 8GB iPhone 4 to boost sales in India. Apple Insider saying that in India, sources say Apple may begin to sell the 8GB iPhone 4 again in a move to increase market share. The Economic Times had the original report. The paper also claims the India-only iPhone 4 will be priced at a significant savings to the unit's original retail price 3 years ago. However, an issue with the rumored move is iPhone 4 supply. Apple stopped iPhone 4 production and moved the 4S into the legacy handsets entry-level sales slot. Sources say Apple may seek iPhone 4 handsets from unsold inventory worldwide. I wonder if they'll be taking them from Gazelle and those other buyers of previously used cell phones. Any thoughts on that? Yeah, we'll get back to it later. The FDA has named GlaxoSmithKline's Tafinlar, Tafinlar, as a breakthrough therapy for lung cancer. The FDA has given GlaxoSmithKline's Tafinlar cancer treatment breakthrough therapy designation for lung cancer, according to the company, reported by Reuters. That means the drug will be fast-tracked within the U.S. regulatory system, and the drug has already been approved for melanoma. Wall Street Journal saying that Brown-Forman may benefit from the Beam deal, with Japan's Suntory Holdings saying it would buy Beam for $83.50 a share in cash, or about $16 billion including debt. That represents a 25% premium to Beam's closing price last Friday and a 19.5 times forward earning before interest, taxes, depreciation, and amortization. The Wall Street Journal's Heard on the Street says U.S. investors have other choices, including Brown-Forman, which owns Jack Daniels and whose stock trades at 16.6 times forward EBITDA, a 15% discount to Beam's takeout valuation. Wall Street Journal reporting that over 1 million iPhones were shipped to China Mobile. Foxconn, the main assembler of Apple's iPhone, shipped about 1.4 million iPhone 5S units to China Mobile last week as the mobile giant prepares to launch this Friday. A Russian search engine is to receive Facebook data, according to the New York Times. Russian search engine Yandex will receive content from some of Facebook's users under the terms of a deal the company signed, Yandex stated, according to the New York Times. Yandex said it would get full access to public data from Facebook users in Russia and several other Russian-speaking countries, as well as Turkey, the newspaper stated. A New York Times report saying that Obamacare enrollees tend to be older. Americans who have enrolled in Obamacare insurance plans tend Obamacare insurance plans tend to be older and possibly less healthy than the population as a whole, according to the source, which cited unnamed officials. New York Times went on to say that trend could cause premiums to rise and threaten the viability of Obamacare. Global smartphone shipments are expected to reach 1.24 billion in 2014, according to Digitimes. Global smartphone shipments are expected to top 1.24 billion units, with Apple seeing its shipments double, largely due to increased shipments in China and Japan, according to Digitimes. Samsung's growth rate will be limited as its sales will be depressed by the iPhone popularity, while Lenovo is expected to step up its efforts to boost sales in overseas markets. Bloomberg reported that Fox Network will not be participating in network TV's pilot season. The Fox broadcast network is moving to year-round development of TV series and will not participate in the traditional pilot season, a move that is similar to the cable TV process. China Mobile to reduce format specification to 3-mode models. Digitimes report the company has reduced the format specification requirement to 3-mode models from 5-mode and 10 frequency band smartphones for 2014 procurement. According to Taiwan-based supply chain makers, the move is expected to benefit China-based IC design houses and smartphone vendors. Dieter Ziesch, the chairman of Daimler, believes that fully autonomous cars could come to the market by 2015, though it will not be without challenges. The Detroit News reported that Ziesch says of challenges, it's not just a technological challenge, it's a legal challenge, even some ethical challenges. How does the car decide if it faces a bad decision, he was saying. But he is making the claim that by 2025 we could be seeing fully autonomous vehicles. NASDAQ and the S&P are interested in acquisitions to grow index businesses. Reuters reports that NASDAQ OMX Group and S&P Dow Jones Indices say they're interested in acquisitions to build their index businesses, according to Reuters. The CEOs of both firms recently told Reuters that they would be interested in looking at bidding on index businesses that come to market, including the index businesses run by Russell Investments and Barclays. So, now we've got Today in History. What happened on this day in history? Well, in 1954, the Hudson Motor Car Company merged with Nash Corporation, forming the American Motors Corporation, later known as Jeep, when it was acquired by Chrysler in 1987. On this day in 1973, Elvis Presley's concert Aloha from Hawaii is broadcast live via satellite and set the record as the most watched broadcast by an individual entertainer in television history. And on January 14th, 2010, Yemen declared an open war against the terrorist group Al-Qaeda. I remember that. I don't remember the first two because I wasn't born yet. But
Ho, ho, ho.
Right. So let's see. Famous birthdays today. Faye Dunaway was born on January 14th, 1941. American actress, who won an Academy Award for Best Actress in her
Funny Girl.
Oh, were you guessing the movie?
Yeah.
Well, you're wrong. Faye Dunaway won the Academy Award for Best Actress in the 1976 film Network. Dunaway was also nominated for Bonnie and Clyde in Chinatown and also starred in The Thomas Crown Affair, Towering Inferno, and Mommy Dearest. Another famous birthday today is Alan Toussaint. Does everyone know who Alan Toussaint is? No? He's an American musician, composer, and record producer, an influential figure in New Orleans R&B. Perhaps you've heard the song Working in a Coal Mine or Everything I Do Gotta Be Funky. That's Alan Toussaint. Very nice man. I actually got to meet him a few years ago at the Detroit Jazz Festival. He's a very, very cool dude. So that wraps it up for today's editorial headlines. Just a reminder, ladies and gentlemen, that the show would not be possible without our dear friends like George Ruhana at Options House, who will give you 150 commission-free trades just for signing up for an account through this page. So there's buttons at the top, at the bottom right. Go ahead, make a click, sign up for an Options House account, get 150 commission-free trades just because you listen to Benzinga's pre-market info. And it looks like Brent is ready to go over here with the rating changes ahead of the
Oh,
bell.
yeah.
So let's see. I'm looking for Brent. Where is he?
Hey,
Oh,
here I am, Joe.
I found him. All right, Brent, take it away.
I did want to point out, if you are on the Options House page, I would urge everyone to scroll down from where the screen share is at. We do have a nice little chat. We've been talking about the chat. If you have been wanting to get engaged, just scroll down a little bit, log in, and everyone can join this nice community conversation we got going on here.
You know, that's a good point, Brent, and I fail to mention it every day, that there is a chat room here. You can put in questions, and we will answer them on the show, providing that they are related to what we're talking about. I mean, you can ask Joel about what he does in the evenings and weekends, but I have to admit it's not very interesting.
Yeah, so most of the time you're going to want to keep it on like the stock side of things.
Or you could ask Dennis if he's going to trade in his F-150 for the new all-aluminum model, which is 700 pounds lighter.
He's going to be piping in the chat here in a second.
But we
with some
typically
witty
like
response.
the more market-related questions. So if you're ever wondering anything, throw it in there, and we will let you know.
We do have just a couple minutes before the bell, so I'm going to try to just roll through these really quickly. We do have a rather notable amount of upgrades and downgrades this morning. Let me hit you with some of the top upgrades. Goldman Sachs upgrading shares of J-Bill Circuit Juliet Bravo Lima to buy. Also having an upgrade on Danaher this morning, that is Delta Hotel Romeo, coming from Bank of America. It looks like this Bank of America analyst did make the call ahead of some guidance out from Danaher this morning, and the guidance out of Danaher does look strong. Once again, that is Delta Hotel Romeo. Maybe take a look at that one after I run through these real quick, Joel. JP Morgan upgrading shares of Verifone, Papa Alpha Yankee to overweight. We had an upgrade on shares of Electronic Arts. That's EA at Credit Suisse. They now rate with an outperform. And then we did talk about the Wells Fargo upgrade on shares of Google a little bit earlier. Wells Fargo now rating Google with an outperform. They also raised their valuation range to $1,300 to $1,400. Excuse me, $1,300 to $1,500. About a midpoint of $1,400 there. There's the opening bell. I'm gonna go faster, Joel. JP Morgan upgrading shares of Brocade this morning. That's a couple notch upgrade there from equal weight to overweight. And then also at JP Morgan getting an Intel upgrade, now rating that stock with an overweight rating. A couple of the downgrades really quickly. Citigroup downgrading shares of Microsoft earlier. We actually didn't touch this one during the show, thus I am highlighting it now. Citi now rating Microsoft shares with a neutral. Morgan Stanley downgrading shares of General Mills to underweight, lowering that price target by $1 to $48. Barclays downgrading shares of SiriusXM to equal weight, cutting that price target from $4.50 to $4. And then one more, Credit Suisse downgrading shares of Foster Wheeler, Foxtrot Whiskey Lima Tango from outperform to neutral. I think that about covers it. There was some notable new coverage, but the new coverage is never quite as exciting as the upgrades downgrades. So what do we got? We got the S&P futures 18, just crossing 1820, Joel?
Yeah, can we get Shaky Jake on with a few movers here? And
Jake, you are being summoned.
Yeah, I mean, we missed him for 2 days. Friday wasn't feeling well, and then the old flat tire trick yesterday. So real quickly, just before Jake comes on with the movers here, we seem to have J.P. Morgan and Wells Fargo going in opposite directions here. J.P. Morgan's got a nice rally on its heels here. Just made a 58.48 high, folks. Be alert at two highs between 58.67 and 58.76. So potential resistance level, the double top. Wells Fargo trading in the red here. Did come up and kissed the low and the close from Friday. Or excuse me, from yesterday to 45.50 levels. So a couple levels to keep an eye on, and a couple of the big bank stocks. How you doing, Jake?
I'm doing pretty well. Feeling a little bit better after Friday, and my wallet's feeling a little lighter after having that wheel repaired yesterday. But you're comparing those two financials there, and I think it's really interesting to take a look at those because Wells Fargo is more on the consumer side, especially for the lending, while JP Morgan's more on the investment banking, trading, and like corporate finance side. So it's just really interesting to see how one side is rallying while the other is dropping, and you can even if you get some more data, if you get Wells Fargo and then maybe like Bank of America and a few others, you can start seeing actually how perhaps the housing market's going to do, and you can start kind of really extrapolating some interesting data from that. So I'm really interested to see how some of the other financials do this week. We've got Bank of America tomorrow, we've got Citi on Thursday, we've got a few others. GE on is it GE on Friday? Oh, Morgan Stanley's Friday, yeah, and then Goldman's Thursday too. So Goldman, more in line with the style of J.P. Morgan. So obviously, a lot of major financials reporting this week. You also have Capital One coming through as well. So really going to get a kind of feel for where the money flows are going, and it can kind of give us a clue for how earnings season's going to look. As far as a group of stocks I want to take a look at that are on the move this morning are the 3D printers. Not sure how much you guys have gone over them yet this morning, but we did have a little bit of lowered guidance from Stratasys on the EPS side. They guided below street estimates on EPS, but the revenue was actually guided above street estimates, and the street is really bidding them down on this. We have or offering them down. My mistake there. Joel's giving me the hand signals. I got that wrong. And so we have Stratasys falling there almost 4.5% now. It's kind of picking up some steam. Earlier this morning it was down about 3%. So Joel, Stratasys is Sandy, Sandy, Yankee, Sandy. For anyone following along on their own charts there, Joel, what are you thinking of this one? The whole 3D printing sector was falling this morning, kind of led down by this Stratasys guidance. Any thoughts here?
We haven't got to the pre-market low yet. We made a pre-market low at 122.88 and then tried to crack it again, but ran into trouble at the 123.01 level here. So could use that as a parameter if you're trying to pick a bottom here. The longer we can hold above that morning low of 122.88, and then during the regular session, we made a low at 123.50, so we are rallying. Kind of hard to pick resistance in a stock that's trading down $5, but you did have an intermediate high in the issue at 125 even. So there's a couple parameters. Triple D did dip under 9.
They're actually on the rise now.
Yeah.
Which is interesting.
It was kind of, well, you got a lot of people, not me, but they're stuck short these issues here, just looking for a beacon of bad news, perhaps, to help them out. Now this stock is way above its pre-market low. They got way overdone here in the pre-market. Took it down to 88.01. But here in the regular session, we have not been able to get anywhere near that $90 level. 90.70 is the low. So still keep an eye. 90 still good level. Coming back on the upside here. 91.58 was yesterday's close. We did get through by, we did get up to 92.35, but I'm keeping an eye on 91.58 in Triple D.
So another one I want to look at as far as the 3D printers go is the X1. That's X-Ray Oscar November Echo. For anyone following on their own charts, that one's getting really beat up. It was down as much as 6% a couple minutes ago. It's flying all over the place. It's above $62 right now, but I mean it's really been taking a hit. So this is one other I just want to take a look at because it seems to be taking the hit harder than Stratasys, and Stratasys is the one that provided the guidance.
Well, it only opened a buck lower too. So if you were doing the sympathy play on that, opened at 64.40, bumped another 30 cents, but came crashing down to the 61.08 low. That could be a spike low here. I wouldn't call that support. What I would call major support is around the $59 level. You had three lows between 58.90 and 59.29 back at the end of 2013 going into the first day of trading this year. So there's a couple parameters.
If you want to see a name this morning with some serious action, Brent just gave me a heads up on this, and it's GameStop. Golf Mike Echo, that's the ticker there, down almost 16%. Company lowered its fiscal year 2013 EPS guidance from 308 to 325, that was its previous guidance, down to 296 to 306. The street was looking for 325, so big drop there. They also lowered their fourth quarter EPS guidance from $1.97 to 214, that was their previous guidance, down to $1.85 to $1.95, so completely below that range. The street was at 214, so they're below street estimates, they're below their previous guidance, and man, the traders are just crushing it this morning.
And now let the guys on the desk here chime in, also in the chat room. Have you ever bought anything at GameStop?
I did a while back, but honestly, like when even when I was like a gamer, it wasn't that great. Like their deals weren't that great. You never really wanted to go there. If I want to buy a video game now, why would I not just buy it from Amazon? Like why don't I just order it? I mean, there's no real reason. Often I can get it's a commodity. It's the same price everywhere, but I can get it from Best Buy, I can get it from Amazon, I can get it anywhere. There's nothing that special from GameStop, and I think it's kind of showing here.
Yeah, definitely. Kind of little over a buck range so far in the session. Here's one of the instances where you had a pre-market low of 38.27, made that very right close to the opening bell. Now we've hit 37.92. So I guess here for the first few minutes here, trying to hold this $38 level, down 16%, down 7.5 bucks here. 38 doesn't look like it's going to hold here. Let's go out on a little bit longer term of a chart here to see. I mean, this stock has not been at this level since June of 2013 when it had a low at 37.93. So if you've been shorting that stock for the last 6 months here, here's your chance on it. 37.93. If in fact that level doesn't hold, I don't want to say this for people that are long, but you got a long way to go to the another low that you had in June at 34.84. So not a good day for GameStop. It won't stop going down.
Sure seems like that's the case. When Brent was going over his analyst ratings, I'm not sure if he hit on Intel or not. JP Morgan upgraded the name to an overweight rating this morning, bumping its price target to 29 bucks. Nomura also maintained its neutral rating on the company, but raised its price target to 27 bucks. Now shares are over $26 right now, up about 2% this morning. The reason I'm so interested in this is because the company reports earnings on Thursday. So these are two major analysts. These are not like small shops trying to make names for themselves. These are some of the biggest names in the game, and they're upgrading it or raising a price target before earnings. That's gutsy.
What do they know?
That's that's what I'm looking at here. I mean, you don't have institutional names like this upgrading someone 2 days before earnings unless they're really, really confident. Because I mean, you're gonna be left holding the bag, and you're gonna look pretty dumb if you're wrong. I mean,
okay, let's take a look here though. That just technically it got over the $26 level in the pre-market. Actually made a high at 26.22. And then looking at it on the day session here, you have snuck above the $26 level. You're now trading it. Going to go up to that pre-market high, perhaps at 26.20. I guess if you're playing this from the long side, you got that 25.90 low. I'd play that close to the vest if it took that out. I don't think I'd want to see it go down to the settlement price. Just want to take a quick look at the Googster. Okay.
Yep.
And did open up higher here on this upgrade or price target raise or whatever. But lo and behold, it's 10 bucks off its high. Opened at 1137.95. Did not get close to that pre-market high, which was near the all-time close here. I guess you got to look for support here at the close in Google. We will take a look at that. See if it can get down. Has a steam to get down there. Another $6. Next support level would be the close at 1122.98, and just quickly, the Spoos did make a new pre-market, made a new high for the session at 21.75, but who put the brakes on that rally there? Now on the lows of the day session here at 18.25. Don't see any support in the Spoos until you get down to the close at 15 even.
I'm just seeing your chart for Google going back to early November there. That just gradual climb, just straight up. It doesn't seem like anything is stopping it there. That acquisition yesterday of Nest for $3.2 billion. It's really making a lot of headlines today because that follows up their acquisition of Boston Dynamics. They're really looking, and a lot of other smaller firms that we're not exactly mentioning right now. So they're really going into this robotics space, really going into this automation space. And I know you guys are kind of joking about what I was saying earlier, but I mean, when they have your thermostat in their system, imagine when you're turning down your thermostat like in the summer, and then you go search something on Google on your computer, and lemonade ads start coming up. I mean, like the data that they're going to have from this is just absolutely incredible, and it also completely diversifies them further. I just wonder when, where's the limit for a company like this becoming a conglomerate? It's very similar to, I think, GE now. I mean, not quite as diversified as them, but like kind of heading in that direction. But where does the
Where does it
government,
stop?
yeah, where do they pump the brakes and say, all right, you guys are becoming a trust here or whatever, and it's time to break up or something like that. I
What
don't know.
if anybody on the show knows, so anybody that works at Google, will you tell them that I already bought a watch? Okay? Because I was searching the internet for a watch. I was looking a long time. Remember, I kept on ordering it. They're out of stock. And now I got my watch. Okay? So now with every site I go to on Google Chrome, I don't want to see watches anymore. I mean, I don't know. I mean, I just don't know when they're gonna figure that out. But let's take a quick look at Cliff's drilling here, and wow, it's getting a pop off and up. I think Dennis was playing like the 26 calls. I hope he got out of those. That was a while ago. Had a spike low yesterday down to 22.08, but was a recipient of an upgrade. I don't know who it was
It's from Deutsche Bank, it looks like. They upgraded it to a buy rating and raised the price target to from $22 to $27. Now, when you're trading around $23 right now, that's a nice little upside there from Deutsche Bank.
Yeah, I don't know. I don't like the price action here so far in this DJ. Opened up at 23.04 and spent a little bit of time above the $23 level. Got to 23.23, but now we're coming back. We're sliding back under 23. So it looks like people were using a little bit of a pop here to get out. If you're playing this from the long side here, I would not like to see that 22.80 taken out, that low here in the first 15 minutes of trading. If in fact you take out that 22.80 low, you could slip back all the way to the close at 22.36. Coming back on the upside, if you can regain the $23 level, you have another 40 cents on the upside to 23.40. And Jake, before you go into your next thing, I just want to take a look at AMD.
AMD,
yeah,
good call.
because you're talking, we talk about related plays and stuff, and I know AMD is kind of the redheaded stepchild in the sector here. But I know Jake's got red hair though, so he's not a stepchild. So sorry about that.
So I'm safe. I'm safe.
Multiple highs between 420 and 426 here, including today's session. So don't call it a breakout, but if this thing can get over 430 here, seems to have trouble doing it in the early going, not really riding the heels of the Intel news, but setting up nicely. Just been trading arrange.com here for the last few sessions, 410 to 420. So we'll keep an eye on it.
Yeah, so AMD will be announcing earnings on January 21st, so we want to keep an eye out for that. But Joel, I mean, we always get the ball rolling here, and suddenly it's 9:45 already. So you want to give us kind of some final thoughts on what you're thinking for the market today, perhaps gold, perhaps the indexes, take a stab. What are you thinking?
Just real quickly, Dennis is pointing out someone is putting their money where their mouth is, and Cliff's drilling. You got a bid for 100K there at 22.80, so that's holding the issue up. Just looking at the S&Ps in the early trading here, did sneak above the 1820 level, got to 1821.75. I like to work at the first 15-minute high. If I'm shorting in this area, do not want to see it go back over that level. Coming back on the downside, we did get a 10-point pop off yesterday's low here, so maybe some buyer's remorse on the downside. I wouldn't look for any major action on the downside until we take out the close of 1815. That pre-market low of 1275 really doesn't float my fancy at all. I'd be having that 0950 as a target. And just a quick note on the Wells Fargo here, we are slipping under $45, or about to. 44.90 was the pre-market low. Well, we've had a jam-packed show today, and once again, we'd like to thank George Ruhana for coming on and giving us an education and options, something we all can learn from. And we'll have him on again. We'll let everyone get to their trading platforms on Options House, and we'll be back with you tomorrow.